Hey everyone, and welcome back to another video for today. We're continuing here on the Fintech team for the week. We previously talked about Dave. If you missed that video, that will be in the top right corner. In today's video, I do want to touch on another small player in the Fintech space and one that is a bit more focused towards the buy now, pay later space. So as you can clearly see, there are quite a lot of companies that deal with buy now, pay later, right? We've had, of course, the huge companies like Klarna, Afterpay, which is part of Block. We have Affirm, but we also have smaller players such as Sezzle. It's another name that a lot of you during the live streams and in the comment section have said, look, you have to go and study Sezzle. So that's exactly what I did. And that's exactly what we're going to talk about in this video. Now, for those that are unaware on how buy now, pay later companies make money or generate revenues, of course, there are companies, again, like Block, like PayPal, that have a business, and one of the business segments is a buy now, pay later arm. But there are companies like Affirm, Klarna, Sezzle that only do buy now, pay later. Of course, there is also a whole ecosystem attached to that to make sure that the customer stays with that company and maybe spends even more money with that specific company. But the main way these companies make money is when you choose one of the services at an online or in-store checkout, the buy now, pay later provider pays the retailer the full purchase amount upfront minus a fee. This fee, which can range from 2% to 8% or more, is a cost the merchant is willing to pay because offering buy now, pay later often leads to one, increase in sales, higher average order value, and reduced cart abandonment. We've heard that from, of course, PayPal more recently. We've heard that from Affirm, Klarna, and a lot of the other players. One of the other ways that they also generate money is through interest and or late fees. And so the company we're going to touch on today is this one right here. And yes, as you can see, over the past 3 years or so, this stock is up another 4,000%. And at one point it was up close to 8,300%. Imagine buying this business. Same with Dave, right? Huge outperformance. I mean, you can retire if you put enough money in it back in 2023. And yet this is a company worth $3.1 billion. Margin-wise, as you can clearly see, is pretty good. Gross, EBITDA, operating, net, free cash flow margin, pretty good. PE, trailing PE 32.6 times, forward PE 26.4 times, price earnings to growth ratio of 0.4. If you look at the growth rates for the past 3 years, has grown like a rocket, right? 46.5% compound annual growth rate for the last 3 years. If you look at the next 2 years, that's 44.7%, EPS growing a bit faster than that. Now, the thing with Sezzle is that, again, it's a small player. And so, yes, of course, these growth rates make more sense. But can it become a 10x from here? Can it become a $30 billion company? Can it become as big as an Affirm? And to understand all of that, of course, we have to go and look at the competition. We have to go and look at Affirm. We have to go and look at Klarna. Klarna is a privately held company, but they do report quarterly figures. I know you didn't know that, but now you do. We're, of course, also going to have a look at what PayPal and Block have said specifically about buy now, pay later. So without further ado, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/investor. Thank you very much. First up, let's start here with Affirm. Affirm is also a company that back in 2023, I think at the bottom, you would also have picked here a nice multi-bagger. But what's important with Affirm is that, well, gross profit margin over the last couple of years have dropped, but you can clearly see a nice rebound since 2023. As for free cash flow margin, that has also recovered over the last couple of years, and operating margin, although still negative here on annual basis, that has also recovering quite a lot. Looking at revenue growth, you can see that over the past 5 years, revenue has grown at a compound annual growth rate of 46.8%, and for fiscal year 26 and 27, still expected to grow approximately 22% in each of those fiscal years. Looking at GMV over the last couple of quarters has accelerated as well, looking at transaction per active accounts and active accounts that is also going up and to the right, exactly what you want to see. And then looking at EPS. Expected EPS for this year is $2, then 2.4 in fiscal 26, and then 3.4 in fiscal 2027. Now, if we go and listen to what PayPal has told us about the buy now, pay later business that they have, they said the following thing. Buy now, pay later volume grew by more than 20% in the second quarter, while monthly active accounts climbed 18%. This indicates a healthy and expanding user base for the service. The average order value for customers using buy now, pay later is more than 80% higher than standard branded checkout transactions, what we've seen at the start of the video. This shows that buy now, pay later encourages consumers to spend more. Of course, there are risks attached to that. Out of control spending is definitely not a good thing, but we're going to talk about delinquencies and all of that later in this video. PayPal's buy now, pay later is a key part of its broader ecosystem, offering it at a lower cost than a standalone provider. This integration creates a compelling value proposition for merchants and consumers. Buy now, pay later, along with Pay with Venmo, is gaining market share from other payment methods, outpacing the overall market. As for future plans, and a couple of examples here, or one specific example from Ace Hardware, where a buy now, pay later promotion resulted in a 35% year-over-year increase in total PayPal sales and a 7-fold increase in average order values. The expansion here is that while PayPal will offer, or is already offering in some markets, buy now, pay later in 9 global markets and plans to expand further. The company is also moving into the offline space with the launch of flexible pay later to go for buy now, pay later offline in Germany as part of its PayPal Everywhere initiative. As for Block, more recently, the CFO highlighted that buy now, pay later gross profit reaccelerated during the quarter. This was fueled by the increasing attach rates for post-purchase buy now, pay later on the Cash App card. The integration of Afterpay into Cash App, a key strategic priority for the company, has been successful. The post-purchase buy now, pay later feature on the Cash App card reached 1 million monthly active users in July. As for GMV for the buy now, pay later segment, so basically for Afterpay, accelerated to 17% year over year. This is a significant improvement from the 13 and 16% growth seen in the first quarter. Management described the early signs for post-purchase buy now, pay later as really strong, with robust conversion and adoption. The origination run rate for this product crossed $2 billion in July. Last couple of things here. The company is leveraging insights from its Bravo product, which provides short-term loans to improve the performance of post-purchase buy now, pay later. The use of the Cash App credit score is helping to enhance the margin profile of the buy now, pay later business. This has always been a sort of a discussion, and I do think that FICO might start play a part here. I think I've seen that in a recent coverage of, I believe, the Wall Street Journal, which of course might, because previously when buy now, pay later was announced, a lot of people didn't think it was legit. A lot of people thought it was just another way of, well, spending a lot of money that you don't have, and then you have high delinquencies, and then, of course, everything comes crashing down. But I do think that this is evolving into quite a good business if, of course, your underwriting is top-notch. Last couple of things here. Management expects the post-purchase buy now, pay later product, still talking here about Block, to contribute more significantly to the company's growth throughout 2026. This indicates that the company sees this integration as a long-term growth engine. I mean, I hope so, because the acquisition of Afterpay was, of course, a pretty expensive one. Then, as for Klarna, like I said, Klarna is still private, is expected to go public, but Klarna does release quarterly figures on their website. So, merchants were up 34% year over year, active Klarna consumers up 31% year over year, GMV up a 19% year over year to $31.2 billion, transaction margin dollar before provision for credit losses up 19% here as well. As for revenue, $823 million, up 20%, and adjusted operating profit of $29 million. The CEO said the following thing: "As we celebrate 20 years of Klarna, we're hitting milestones I once only dreamt of. $823 million in revenue 111 million active Klarna customers, 790,000 merchants, and $1 million in revenue per employee. The Klarna card is becoming a preferred payment method across our most mature European markets, and we're now rolling out an enhanced version in our largest market, the United States. Strategic integrations with leading PSPs and our partnerships with some of the world's largest merchants are expanding Klarna's reach and accelerating our growth. At the same time, our growing consumer base remains healthy, with more customers paying on time more than ever before. That last comment, of course, is extremely important. Now that we've got that out of the way, let's look at Sezzle. So here as well, you can see growth has exploded more recently, but it's still expected to grow quite rapidly in the coming fiscal years. Now, what about margins? Same story here. Margins, gross profit margin, have gone up and to the right. The purple one here is operating margin of 56.7%. Then free cash flow margin is fluctuating, but we are still positive right now at 7.7%. Looking at EPS for the last 12 months, $3.1. For fiscal 25 is expected to be $3.3, then 4.3 and 5.7 in fiscal 26 and fiscal 2027. As for the Q2 results, you can clearly see that this is still a very, very fast growing company. All in all, as for fiscal year 25 guidance, adjusted net income up 85.8% year over year, adjusted net income per diluted share up 80.6% year over year to $3.25. As you can see, 3.3 is approximately the expected number. Then the other metrics here, GMV up 74.2% year over year. Total revenue as a percent of GMV did drop quarter over quarter, but all in all, I mean, the year-over-year progress here is quite astonishing. We do have net income that is down 7.1%, but I did say that this was due to a one-time tax benefit in the same quarter last year. So Q2 2024 was artificially higher than Q2 2025. Other than that, still very, very good performance. Overall, if you look at active customers, that's up 4.6% quarter over quarter, up nicely year over year. Unique merchants shopped at by consumer is also up quarter over quarter. Well, in this case, 66,000 quarter over quarter. Year over year, we're up significantly here. Monthly on-demand subscribers or mods, that's up 286,000. Quarterly purchase frequency on average is up 1.3 times year over year. Repeat usage as a percent of total orders is up 90 basis points year over year. The number of transactions is up 62.6% year over year. They said that the 748,000 mods engagement fueled growth. You can see this right here. Around 11 more orders from subscribers versus non-subscribers. 38 times top 10% anywhere subscribers 90 days frequency, and around 37% in-store orders as a percent of total anywhere orders. And that's what you're seeing right here. On-demand, premium, that's a subscription service, and anywhere is also a subscription service. Then, as we said at the start, it's great that you can grow this buy now, pay later business, but it's all about the underwriting here. And so they said, controlled underwriting to optimize growth and profitability. Approval rates increased in the second half of 2024 for both repeat and new consumers. We see this right here, while the outstanding balance for delinquent consumers remained in line, which we see right here. That's the most important part, because once you see that this is getting out of control, it doesn't matter if this company continues to, or any other buy now, pay later company, if they can grow extremely quickly, but this is getting out of control, then eventually it will blow up in their face, and it will blow up in your face if you are an investor. As for the outlook, they expect revenue to grow between 60 to 65% year over year. Total revenue less transaction-related cost as a percent of total revenue between 60 and 65%. Adjusted net income of $120 million. Adjusted net income per diluted earnings per share, we've seen that number, 3.25. Net income, they said the following thing. Year to date, net income exceeds adjusted net income by $4.1 million due to discrete tax items, which will cause net income to differ from the previous guidance of $120 million. That's for adjusted EBITDA between $170 and $175 million. That's up from the $88.4 million in 2024. And so if we're looking at the stock right now, back in May, the stock was at around $50 or so. They reported earnings, stock went up. And since then, well, the stock has gone up from around post-earnings reaction, $67 or so, all the way to $185. But since then, the stock did come crashing down. It's down around, right now, around 50% or so. You can see that the stock has respected the 200-day moving average for the last 2-3 weeks or so. And if we zoom out, and maybe I'll show you here on the weekly, you can see that this is a stock that does respect the 200-day. Okay, here back in April with that Liberation Day, it did drop below, but quickly rebounded above that. Currently, you can clearly see, touches the 200-day, rebounds every single time. And so, is it worth jumping in? Is the hypergrowth behind us? Yes or no? I mean, I don't think the hypergrowth is behind us. I think, as you can clearly see, it's still a company that is growing very, very fast. It's still a small company, $3.1 billion. And I'll show you, for example, a company like Affirm, how much that is worth. Affirm is worth right now, at the time of recording this video, around $25 billion. Right, around $25 billion. This company generating $3 billion in the last 12 months. A forward PE of 38.2 times. Also expected to grow revenue slower than Sezzle. So can Sezzle continue this growth and become a $20 billion company, $25 billion company, $30 billion company in the future? It's a possibility. It's a possibility if they can continue to grow very fast, grow in this market, hope that this market also grows and takes chunks from the credit card market, because that's essentially what Affirm, Klarna, and all the other companies are trying to do, right? They're trying to take share of the credit card market. And so, yeah, with Sezzle, it's definitely a possibility. It seems like this is a management that knows what they're doing. They're letting the numbers speak for themselves. I don't own a position here, but yeah, you could say, yeah, but I own PayPal. So PayPal has a buy now, pay later business. So if buy now, pay later really becomes bigger, we'll benefit from that. I agree. Same with Block. But I think when you want a pure play, going with an Affirm or a Sezzle, or in this case Sezzle, just because it is smaller, you'll probably get higher returns just because you're starting here from a smaller base. And this is a business that is just focused on that and is still growing much, much faster than all the rest. So yeah, pretty exciting business. Of course, if the economy does go south and we do get a recession, then yes, spending could get hurt, although you might say, yeah, but that's when usually rate cuts come in and that should help these types of companies. So I guess focus on the company, less on macro, because macro usually only impacts the short term, not really the long term of the company. Long term for the company is the business and the management. And so far, I guess they've been doing quite well. So all in all, that's about it for me in this video. Like I said, I have no position in Sezzle. It's a very interesting company. We'll put it on the watch list and we'll cover it more and more along the way. Share your thoughts down in the comment section below and we'll see each other in the next one. Bye-bye.